Good morning, good morning. How you guys doing? Good to see you today. Nice to be back. Glad that you can join me. And 8 o'clock in the morning, March 4th, January, February, March, April 4th. April 4th, 2024. I don't even know what day it is. Doesn't that happen to you when you're a trader? It's Mondays and Tuesdays and Wednesdays just all blend in together. Weekends become weekdays. Especially for me, I work every weekend, Saturday and Sunday, so it's all the same. Anyways, let's get started. Today, we're going to take a look at the euro pairs, okay? We did this a couple weeks back, maybe a week and a half ago. We were looking at the euro pairs. We were looking at what is the main driving factor of price at that time. We were looking at whether or not institutional supply or institutional demand was in play, and we had determined that overall it seemed like supply was in play. So we're going to be taking a look today because we just recently got a very strong push to the upside on the euro. A lot of people speculating as to why the euro was pushing up as much as it has. And so we'll take a look at, some of the reasons why we think the euro is moving up. And then we'll take it from there. All right. So again, thanks for joining today. And so let's first begin with taking a look at some of the data that came out this past week. Let's take a look. Let me just bring it up on my FX book. This week's data. Okay, here we go. So we got, was it yesterday? I'm just trying to look it up. Yeah. It was yesterday. We had some data come out. And it was interesting, the timing, because let me just do a screenshot here to show you. We had price at the lows. And all of a sudden, this was April 3rd, right? You look at where April 3rd is on the chart, and you'll see it's right down here, okay? Down here near the lows. So as price was sitting down there at those lows, what took place? This data came out, and whether it's a coincidence or not, you have to look at all the evidence and try to determine what is taking place, right? So we look at this, and what do we see? We see a bunch of negative data came out for the euro. Okay? Right here. A bunch of negative data came out for the euro. All right? And so what happened? What ended up happening is you had positions, retail traders opening up positions on the short side, okay? They were aggressively long down here. Actually, let me change the color so that you could see it clearly. They were aggressively long down here, okay? As price started to rally up from this institutional demand zone, they started to slowly switch to shorts. But it seems like after this data came out and the aggressive rally took place, look how quickly they added shorts. Look at that. Okay, 55, 63, 83. Now we're at 91% of retail traders are short. 91%. Now at the same time, we had Powell come out and make his speech. And he's saying that, yes, indeed, we're going to have the dollar, we're going to have the rates start getting cut this year. And so there's a lot of speculation whether or not they're going to or not. I'm seeing two narratives being pushed out there. One is that it's not going to be cut this year. And if it's not going to be cut, then that would be strong for the dollar, right? Dollar would be expected to rally up. And so what would we expect from the euro? We would expect the euro to drop if the dollar is rallying up. But Powell came out and said that indeed they're going to be cutting rates this year. So we'll see whether or not that comes true. But what I'm focused on is what retail traders are doing. Okay, and what I see is now that we've reached this area of supply on the chart, and they're at 91%, they're going to start bailing on their short positions. And they're going to start increasing long positions again. Very likely. Very likely. And it could be that this is going to happen after they've, absorbed the information that Powell was suggesting, that rates are going to be cut. If rates are cut, that would mean weakness on the dollar and strength on the euro. And how interesting to have that come out after this, okay? After this move to the upside and a luring of retail traders to accumulate a short position. Because you do know most traders look at data and most traders listen to the news. And they're using that information to trade with. And as we've said many times on our shows, and this is something at the core of what we teach at the school, is that if you're following data and you're following the media, you're falling into the traps that are being set for you constantly over and over and over again. So to be a winning trader, you need to be thinking very differently than your typical trader, right? So this is a completely different approach to trading, but it's brought us a lot of success. And so we continue to trade this way. So here's the situation with the euro right now. We're at these highs. Retail are at 91% short. And interesting thing is they just might start bailing out on those shorts up at these highs for long positions. Okay. So let's take a look now, shall we, at the other euro pairs. So that's euro US dollar. We look at euro Aussie. And right now we are at 82% long with retail traders. 82% long. This is a nice drop here. And you might be asking yourself, why are they long as opposed to short like they are the euro? Well, they're long because price dropped. That's the easy answer. Okay, they're long because price dropped. But let me show you something here. I'm going to switch over to the sentiment here on my FX book. So yeah, they're about 82%. But let me open up what is taking place here. Okay, do you see what's happening here on the weekly chart? We mentioned this last time we did our session. This is a institutional supply zone. As you can see, price has come up, has been sitting here for several weeks. But at the end of the day, supply is in play. What does that mean? That means the euro is expected to be weak. All right. It also means that the Aussie will be stronger. And if we flip over to the Aussie US dollar chart, what you'll see is that it is actually rallying right now. And if you're wondering why it's rallying, well, Aussie and gold are tied together. Okay, it's a commodity currency, like they say, the Aussie. And you have gold rallying up right now, so that's the strength that we're seeing in the Aussie right now. Okay. So, Euro Aussie, we have supply in play, which is going to put pressure on price. It's going to be putting pressure on price to the downside. We have supply that spells weakness for the euro, which is good because that's what we're looking for, right? Overall, our bias on the euro is bearish. We have seen a lot of evidence to support that over time the euro is going to be bearish. Okay, so we maintain that bias. and we are only looking for opportunities to short the euro. Okay. So let's continue. EUROCAD. Let's take a look at EUROCAD, and what do we have? Let's go to the 4-hour chart. Let's look at my FX book, EUROCAD. What do we have? 63% short. So nothing incredible. 63% short. Oops. A lot of people ask me, what's that indicator you have with those little bubbles giving you the indication of the retail sentiment? I just draw them in. That's it. How often do I do it? Well, I only do it on the pairs that I'm looking to trade. So I'll do it very vigilantly on the euro, but mostly after some significant move on the 4-hour chart. That's what I do. All right, so let's look. Let's just make this smaller so we could take a look here. What do we have with the EUROCAD? You see anything that should stick out on the monthly chart? We have supply. We've had supply in play for quite some time. Okay, it's just sitting there. But overall, the bias is bearish. Why is that? Because we have supply in play, period. End of story. Yeah, it could take a long time to drop, but that's just how things are. All right, so supply is in play. Long-term bias is to the downside. Let's look at euro-pound. Euro-pound's a little bit of a mess. And to be expected, because you can see on the pound chart that it is trading a bit off of how the euro is. We look at retail sentiment. Right now they're 55% short, so they don't really hold any bias at this point. And we already got the push to the downside from supply here on the weekly chart. As you can see, price contacted supply, dropped. So now it really can go anywhere, up or down. So I'm not too focused on the euro pound. It's not giving us much of an indication as to what could take place. Euro Japanese yen, though, look at that. Right now, retail sentiment's at 89%. Okay, that's pretty good. Thanks, Rawlings. 89%, that's pretty good. That's giving me an indication that price is going to drop. Strength came into the market recently. Yeah, you can see why strength came into the market. You see this institutional demand area on the daily chart? Look at that. And price has rallied up, okay? But I'll also point out that on the higher time frame, all the way up here, you can see that red peeking through. That's an institutional supply area. So overall, we have pressure to the downside on the euro yen. One thing I will point out, though, is we do have US dollar Japanese yen chart that's been extremely strong. And we know by looking at the latest CFTC data, well, not just the latest, but over several months, that the banks are really focused on going long the US dollar Japanese yen. They're really focused on that. So just keep that in mind. This might take a while to play out, or depending on which one is more powerful, the yen or the euro, this could even go higher. There is a chance of that, okay? But short term, from what I'm seeing with retail sentiment, looks like bearishness is what's in play. And Euro Kiwi, I took a look at it this morning. It's at 66%. Nothing special. But once again, look at what we have on the weekly chart. That's an institutional supply zone. It's an institutional selling zone. This is where the banks were selling aggressively here. They retraced price up. Now, do we know that they're going to continue with their selling? No, we don't know that for a fact. But we know that the last time price was there, that's where they were aggressively selling the Euro Kiwi. And we're back there. So what tends to happen when you're looking across all Euro pairs, when you see supply areas being contacted, what tends to happen is price will typically drop, okay? That's what tends to happen. All right, so we've looked across the Euro pairs, and we're seeing the same thing. We're seeing some bearishness over longer term. Euro Japanese yen, short term, we saw bullishness because of that demand zone that was contacted here. Okay, but overall higher time frame supply is in play. So let's go back, take a look at the Euro US dollar. So again, one thing I will point out is what's in play here. Longs from retail down here switch to shorts on the way up. And if you've been watching the latest CFTC data or several weeks in a row of CFTC data analysis videos that we've been posting on our YouTube, you would know that the banks have been doing something with their positions. And let me just bring that up. There we go. Let me just bring up the Euro US dollar. And let me just bring something up here. If you take a look at longs over the last several weeks, let's just go back to October 31st, 2023. Look at long positions. What do you see there? You see longs used to be 210,000. What are they now? 180,000. What does that tell you? The banks since October have been reducing their longs. Okay? When you put things into context, we're looking at October, right? October. Let's go back to October. Let's take a look at the weekly chart, shall we? There we go. This is October. This is what we're looking at. All of this right here. Okay? All of this price action, what have the banks been doing? Reducing their longs. Reducing their long exposure, okay? At the same time, what are they doing with their short positions? Let's look at October. Let's look at it right now. What do you see? 125, 123,000 back in October. What are they at now? 148,000. So is there something here that you're seeing? Is there a trend that you're seeing here? Reducing longs and increasing shorts. Yeah. So let me ask another question. Where are they going to get those short positions from? I mean, they could just start opening up short positions, but they're the market makers, remember? The banks are the market makers. So they are obliged to take your positions. You want to go short, they have to provide that short to you. You want to go long, they have to provide that long. But remember, this market doesn't serve retail traders. They've created this market so retail traders and all the other hedge funds and so forth that trade the markets that are not privy to what is really taking place here, they serve the banking interests, the major institutions that are actually moving price. So if the banks are looking to accumulate short positions, what would you need? Somebody to provide those short positions to you, right? But that means you need people to acquire short positions, correct? Like a massive amount of short positions, correct? Isn't that what you would need? Right. And what would you need to do that? How would you get people to acquire a massive short position? Data coming out, maybe? 57,000 lots short right now. That's a lot. That's a lot. And very likely going to be transferred over to institutional accounts in the next few moments here. So just a few thoughts just some ideas, just some logical processing of what's taking place in the markets. And I wanted to share that with you. And those are things I think you should be focused on over the next few weeks or the next few days if you do indeed trade the euro US dollar. Okay, so be paying attention to that. I hope this was helpful. If you want to learn more of how we do our thing called trading on our side using supply and demand, retail sentiment, CFTC data, and a whole other bunch of things, you can find us at www.whiteoakfx.com. We'd love to have you. Come join us. Make that big shift in your trading game. If you are experiencing difficulties in being consistent, make that plunge. Come join us and learn with us. All right? That's it, my friends. Enjoy. Thanks. Hit the like button. I would really appreciate it. All your love and your support and your comments. You guys are amazing. I read your comments every day and my heart just melts. I'm really appreciative of all the comments that you guys leave for me. So thank you so much. Enjoy your day and we will talk to you later. Okay? Take care, everybody.